Now I would like to start the first breakout session, Abenomics and Japan's economy, getting from policy enthusiasm to sustainable prosperity. I would like to introduce the moderator for this session, Mr. Jesper Kohl. Jesper, please take it away.
All right. Ohayou gozaimasu. Good morning. Thank you very much for being here. We want to make this interactive. And, I think most of these people here actually don't need much of an introduction, but very quickly, the panel we sort of put together, is trying to be very hands-on. And as you know, economists like to talk. They talk about big picture and small pictures, but really what's going on in the belly of the beast, what's going on as an entrepreneur. And we've got, representing global money, Brian. Brian has been investing in Japan for almost 20 years. He's actually a very hands-on investor. He invests in about 40 companies. One of his big backers is CalPERS, the California Pension Fund. And so he's got very long holding periods. He's not a hedge fund. He's not a trader. I think, Brian, on average, you hold your investments for 5 to 6 years, right? Minimum. So Brian, hands-on, long Japan experience, but with a global perspective. And then domestic capital, Ken. Ken Shibusawa, as you know, set up the Common Fund, at the peak of the Lehman shock, at the peak of the Lehman crisis. And the point here is to mobilize retail money in Japan. And it's very interesting, as a practitioner in my day job, I look at the stock market. And you know that of the trading volume in Japan, basically on a given day, 40 to 50% is global money and 40 to 50% is domestic retail money. When you look at insurance companies, when you look at pension funds, they're actually remarkably inactive. So it really is in the market here in Japan, it really is the competition between, global capital and domestic retail capital. And I think learning what's going on, how Abenomics has changed the landscape hands-on, I think is going to be very, very interesting. And then in the middle, we've got my compatriot from Germany. From the German Ministry of Finance. He's been in Japan for over 2 years now, for 3 years now. And the reason, is that I wanted to bring a real-life example of a national economy, of a country that actually has managed a successful turnaround. Because remember, 10 years ago, Germany was the sick man of Europe. Lots of problems with competitiveness, lots of rigidities in the labor market, lots of rigidities in society and in politics, yet Germany did an aggressive reform agenda and, over, the last 8 to 10 years has actually turned the corner and is obviously now the strongman of Europe. And I thought it'd be very interesting if we kick off today's discussion with actually learning from Florian a little bit about how Germany managed to achieve this turnaround. And so I want to give the floor to Florian for about 7 to 8 minutes to just remind you of what actually happened in Germany. And Florian is going to focus not just on the economics, but also on the political economy. How was it possible for Germany's government to accomplish some very, very deep-rooted reforms against a lot of vested interest opposition? Florian.
Yeah, thank you very much for the kind words, and good morning, everyone, and thank you for inviting me. When I arrived in Japan 3 years ago, the situation reminded me fairly strongly what I have seen in Germany around the year 2000. So it was a rather depressed situation, no growth, competitiveness of companies low, no innovation. And like here in Japan, we also were confronted with a suddenly emerging geographic sphere around our own country. In our case, it has been the Eastern European countries that were able to offer overnight very qualified labor at very low competitive prices. And after the reunification of Germany, the German companies did not know how to react to this kind of challenge. And what has happened is pretty much what we've seen here during the last couple of years before Abenomics came, a production shift, a large exodus of well-known German companies shifting production capacities into Eastern Europe and leaving Germany even more depressed. And we have this particular problem in Europe, as you know, with a very high unemployment. And this led, in the case of Germany, to our fiscal situation barely touching the brisk of collapse. So this was really a very tight situation. And that was the moment where a left-wing government under Chancellor Schröder started to embark on reforms. It was in the infamous, famous Agenda 2010, where Chancellor Schröder announced in 2001-2002 that Germany would have to change if we would want to maintain the way we were or we are. So you know, we have difficulties in accepting kind of American size capitalism. At the same time, we were economically fairly successful during the 1960s, 70s, and 80s. But from one moment to the other after reunification, we lost our fortune. And that was where the left-wing government, and this was a very important element, demanded from its membership to accept reforms that were really touching social benefits and social property that has been accumulated over the years of prosperity. And this was really a very tough call. And just to go through it, we were slashing unemployment benefits that have been very generous. Basically, one could, before the reforms, you could stay without your job for almost 3 years on 70% of the salary, and after that it was phasing out that, but very slowly. We had very generous health insurance schemes. So all the elements you see basically today in Japan, that putting a very strong burden on public finances. And in the same, or another similarity, I would say, is that we Germans, we don't like conflict. We are like the Japanese. We like round tables, we like discussing, and in the end, we like a compromise without that somebody goes to the street and is complaining. So this is, there we are fairly similar also in a way. So Anglo-Saxon countries might be very practical and sorting out things fairly quickly in a confrontative way, and after that they have a good solution. But that's not the German way, neither the Japanese, as I learned here during the last couple of years. So it was clear that there must be a change, and the force of change came from the fiscal side, because it was quite clear that we couldn't go on like this if we wouldn't face a collapse of state finances. And then we had all these very unpleasant reforms, including labor market reform, introducing new kinds of labor contracts, giving possibility to companies to hire and fire more easily. So all this that has been practically unbelievable before was implemented. And what has happened was that the Schröder government was elected out of office, of course, because nobody likes this kind of reforms. So basically, what helped us was that we had one generation of politicians, of a coalition at that time, a left-wing coalition, that was ready to sacrifice the own political future so as to embark on reforms. And another good point for Germany was that the conservatives, then coming into power, had the same concept. They were following over many years. So there has been a fairly stable environment for private companies, for the corporate sector, to understand that the concept would not change, and it included many benefits for the corporate sector. As I said, labor market reforms. Also, corporate tax was amongst one of the highest in before the reforms, 39% effective, pretty much the same amount in Japan, lower to 30%. Also, we are facing an aging problem, so pension was only starting at 67 years, so many things that were good for the corporate sector. And at the same time, why it was all possible to have this kind of acceptance of suffering from the population was that German companies did agree on a round table under Chancellor Schröder to do certain, to offer something, and that was maintaining production and in particular value-added production in Germany. So, of course, we had this tendency to have long workbenches towards Eastern Europe, but slowly but surely things were moving, production capacity and in particular engineering capacity was moving backwards towards Germany. So that the value added was created in Germany. We were able to maintain core competencies in industrial production. But of course, our companies did use the cost advantages of neighboring countries. And that was pretty much the success story. And it's maybe in a bracket, it's not here to lecture you. Germans have a very bad a reputation of lecturing everybody. It's only to bring some elements into your discussion, into the discussion in Japan that might actually help on the ground enterprises. But you need to create a political momentum that this kind of reform are necessary, and having a new monetary policy and spending money in the fiscal sphere, that's very easy, but coming to the third arrow, that will be very difficult, and even the Germans went to the streets and were complaining, and so this was never heard of before. So what I see now in Abenomics is the ideas are right on the table, but you probably need still to go further to actually create a momentum on the ground. That would be my statement. Thanks.
No, very, very good. Thank you, Florian. I mean, you've got, you had, Chancellor Schröder with good credentials with the labor unions and building this momentum and actually implementing labor market reform as well as corporate tax reform. There's a cut in corporate taxes compensated by an increase in the value-added tax. But it was one set. It was very decisive, with which this was actually implemented. And then you had him voted out of office. But Angela Merkel, Hikitsuzuku, right? She basically followed on with exactly the same policies so that the corporations actually had consistency and certainty of the regime. Now, keeping that in mind, I want to switch to Japan. Hands-on. Brian, you've got tons of credentials, tons of hands-on experience. In fact, Brian apologizes. He's got a very hoarse voice, but that's because he had to do mega karaoke, right? Last night with, what was your investors or with some shachos?
We had a CEO meeting this last week.
So, okay, please go ahead.
Where I'd actually like to start is the October before Abe-san was elected. And frankly, we weren't, when Abe-san, when he was the guy that they're bringing Abe back, our first reaction was, oh, crap. And the reason for that was he had done terrible the first time, and we thought, oh, just another in the slew of every month we're going to change investors. And to cut to the end of the story, we're actually very, very happy that he's there, and I think it's important that he is. But in October before that, I was going around and I was visiting with the companies that we invest in, and we hold about roughly 40 companies in Japan. And I meet with the CEOs, and what was really interesting to me is in September and October of that year, for the first time ever, I began to hear the CEOs say to me, you know what, the exchange rate, it's not fair. We're getting killed. And this is when, remember, the yen was hitting 75. And when I first came to Japan in 1986, the yen had just moved from about 240 down to 180. And Toyota was saying, look, our break even is 180. Oh, wait, no, now it's 170. Oh, wait, now it's 150. Oh, wait, now it's 130. And I've watched over the last nearly 30 years as Japan's companies have gone, each time the yen has moved stronger and stronger and stronger, they've said, all right, let's buckle down. We can break even at this level. And I remember in the 90s, I visited Toyota, the headquarters, the last time the yen got real strong. And they had taken out every third light bulb in the headquarters. They told every single employee, you can no longer have 10 pens on your desk. Turn them all in except for 2. And you can only have 1 eraser, right? And of course, that's not going to necessarily make them profitable. But the mindset that Toyota had, and not just Toyota, everyone did that, was how do we be profitable despite the ever-strengthening yen, while China and the United States and Europe, the euro, were benefiting from this weaker, their own currencies vis-a-vis the yen. And somehow, Japan managed to survive it for 30 years, But in September and October, before Abe-san was appointed prime minister, I heard enough. And I was very, very surprised. I kind of thought, well, that's kind of too bad. And what would happen around the world is the US and Germany in particular would point their fingers at Japan and say, don't even think of trying to move your currency. Okay, we'll give you a little break now, but that's all we're going to give you. And then when Abe-san came in and said, yen, 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 and there was some yen relief, to me that was an impactful thing because it did a couple of important, first it gave a reprieve to Japanese companies. They're geared to make profit. In fact, in October, companies started saying, we can be break even at 70 yen to the dollar. That's amazing. That's really, I mean, if you really think about it, that's amazing. Now, if you get some reprieve and you can move that yen to 85, 90, 100, now we're at 107, it does immediately, it gives translates into an earnings boost without them doing anything. It gives them a little bit of cushion to do something. Now that could be something where they sit back and go, oh, phew, yeah, the yen is weaker. But most of them are shell-shocked from having been beaten up by the yen, so they're not sitting back. But then there's a secondary benefit to this, and that is when you go to sell your products in Europe and you're used to being 10 to 15 to 20% more expensive than everybody else in the market, and the only people that buy your product is because it is the best and they're willing to pay more, now you can suddenly cut your price, increase your profits, and compete. That's new. And we're grateful to Germany for improving their economy because Japan needs to sell to Germany. They need Germans to buy their products. And you may know, we just bought Roland, the digital music company. So I especially want Germany to buy lots of digital electronic equipment. But I believe that's the first part that I would talk about. There's several others, but I'll turn it back to you on that.
Okay. Very, very good. So, really from a real world perspective, the fact that the yen has depreciated by about 20, 25%, just creates this cushion. I think, it's very important to always point out that, over the last 20 years, Japan never once got lazy. This is very important, and as you know, real, investment in research and development, investing in innovation actually never stopped, right? And the yen was a stick that, encouraged companies, now that there is the reprieve, actually harvesting the dividends of that, that sort of creates a wonderful cushion that actually is coming forward. Now, having said that, Ken, what about, you walk around, you go to Hokkaido, you go to Kyushu, you hold investor seminars. I mean, Japan has, in the discussion before, I learned something wonderful, which is how much cash does Japan have? How much, the Yokin Zandaka, right? The deposit. How much cash is there in Japan? Do you know? It's 870 trillion yen. And 870 trillion yen happens to be exactly the size of the Chinese economy. So there's one Chinese economy sitting on deposits. And the Bank of Japan has actually done some surveys whether cash is actually used, the turnover rate of cash. And you basically find that about 70% of the cash is never used. So it's just sitting there. I sometimes call it's a goldfish stuck in jelly. It's just stuck there, looking at you like this. Ken wants to build a business on getting that money unstuck. What's it looking like?
Thank you, Jasper, for that introduction. Jasper and I were almost colleagues twice, actually. I used to work at JP Morgan. I left, he came. In the middle 90s, I used to work for a global hedge fund. He was supposed to come. He went to another hedge fund. But we gotta get a chance to have a conversation with him every once in a while. My business is Brian is the big arrow, and I describe my business as 1,000 tiny arrows. And the reason why it's tiny arrows is my clients is not CalPERS, but it's the individual investors. I started my business in 2008, right during the Lehman financial crisis. I didn't time it that way, but it just happened. And after about 5 years, if you look at our, we do a lot of direct marketing of our accounts. And if you look at our data for our direct marketing after 5 years, turns out that in number of accounts, people in their 30s and 40s is about 50%, about half of our accounts. 16% are children, actually. So 66% are actually the future generation of Japan. And if you compare that with any bank or any other sort of financial institution, you'll see a totally different picture. You'll see people in their 60s and 70s having the most accounts. Why? Because they have the money. So that makes sense. But my business is all about long-term sustainable growth here in Japan. So people focus on 2020 these days. I try to look beyond 2020, what's going to happen beyond 2020. And to me, there's going to be a big societal paradigm shift beyond 2020. And that is basically the baby boomers are going to be exiting, and it's going to be replaced by the baby juniors as the most populous part of the population. Why is a big paradigm shift? It's basically, a lot of the problems we talk about is all about the legacy of the high growth period. And actually the baby boomers rode that legacy. So they still have that in their memory. So it's in their psyche. But if that generation starts to exit from the workforce, from society, then you have the baby juniors in their 40s. And frankly, they've never seen growth as adults. But at the same time, they have no stigma about having women as their, for instance, as their bosses and things like this. And so it's going to change. I think a lot of these problems is going to start to really change after 2020. The big difference, though, however, is because the baby boomers, they experienced the high growth period. They accumulated stock, right? They have accumulated wealth. But people in their 40s, they never were able to enjoy the high growth, and so they don't have money. So that's the big problem. And so our business proposition is to help people in their 30s and 40s, still in their working years, to build for their future. I mean, you're not going to get rich through us because basically our average, we do the dollar costing model. 60% are people that put in, like a couple $100 every month. You're not going to get rich, but I call it pension supplement, pension nenkin sapuri. It's a little bit extra, a comfort zone for your future. So when I go to Hokkaido and Kyushu, I don't go to the onsen. I do eat a lot of the good food there because there's a lot of good food here in Japan. But I talk to people, individual investors, about these issues. And the message I've been sending after Abenomics is one key message, is that there's risk in cash. And people don't think that way, right? Cash is no risk. But the risk is not dangerous, it's uncertainty. And cash being able to hold the wealth for tomorrow, yeah, but 10, 20, 30 years, it's a big question mark. There was a lot of talk about the consumption tax hike, and there's different views, but for right now, to me, there's the biggest risk that I'm afraid of is actually the JGB market. I used to be a trader in. When I was trading JGBs, it was 4 or 5%, went up to 8%. Now it's less than 0.5% for the 10-year. And it's not just about the level, but it's about the liquidity. I used to see trillions of yen go across every day. How much the trade is? Nothing. And to me, the market serves a function. And to me, it's an information clearing mechanism. And right now, the JGB market has lost that mechanism. It's broken. And so the risk, I think, on the consumption tax being done is the impact on the economy, I understand. But can the JGB market digest, was it 4 trillion yen of tax revenues coming up? I mean, how's it going to digest that? Oh, the BOJ will buy it. Well, we can talk about that for a long time about that. But the message is that there's risk in cash. And the mutual fund industry here in Japan is currently about 5 trillion. I think it's about 5 trillion. And in today's Nikkei, it was saying the US is 20 times as that. Aspen mentioned 870 trillion worth of cash. We have more cash than the Americans, actually. And so, we're not going to go 20 times in the mutual fund industry, but doubling it 3 times it's not you know, it's not out, you know, it's not imagination. It can happen. And so on the last remark about the cash is that's one parameter I actually look to see whether Abenomics is succeeding or not. And to me right now it hasn't, because when it first started, I think in 2013, I think the 2013 March, it was 865 trillion yen. It's basically the same. You know, it's 5 trillion, which is it's a big money, but it's actually it's increasing. And so to me, so unless we see that cash balance start to go down and it's actually being, you know, circulating in the economy, then we can't say that Abenomics has really started to kick in yet.
Excellent. So from your perspective, you know, there's potential because Japan does have financial capital or potential capital, but, you know, is the capital responding to Abenomics? Is the capital responding and flowing in the direction of higher returns? The answer is no. Brian thinks that it's starting to happen, but the domestic retail, so far, no response to the whole thing. Brian, the pushback against Japan is simple. And trust me, I get a lot of pushback since I'm always optimistic. But the pushback is, look, you know, the population is going down, and there's going to be inflation, and the government debt is unsustainable. They're going to default sooner or later. Why should I bother investing in Japan? Brian, why do you bother?
We've got a long, like 2-hour presentation to kind of mention that, because that's what I do all the time. The biggest.
If you can't say it in 30 seconds,
It'll
you
be,
can't say it.
It won't be 2 hours. I spend most of my time dealing with why in the heck should I even think about Japan. But I think there's some critical things. Number one, Japan leads the world in technology still. And I take it as an example. When the United States lost to Japan in the TV production war, what did the United States do? In order to compete, they went out and they bought furniture companies and they put the TVs in this big, nice wooden cabinet, right? That's how the US decided to compete. What did Japan do? Now Japan no longer really makes TVs, right? If you're working for Sony and your job is making TVs, you better be polishing up your resume, because, and maybe looking to go work for Samsung or LG. But what Japan did do is it went on the high end and the inside of what makes it happen. If LG or Samsung wants to make a TV, they have to buy a machine made by a company called Olvac, it's in our portfolio, full disclosure, that makes the machines that make flat panels. They don't make flat panel displays, they make the machines that make it. If you want some of the higher end chips, you've got to come to Japan to make it. If you need the sputtering and the coding processes that Japan is fantastic at, Japan still owns those. That's one reason. The second, there's about 10, but let me give another example of what I think is interesting in Japan. We have a company called NIFCO. They make little plastic fasteners that hold a car seat together so you don't have to do a screw. And they had begun to do production overseas. They'd gone into China, labor-intensive things all moved to China. Well, a couple of years ago, they said, you know what, let's move to Kyushu. And they opened up a factory in Kyushu, and I went and I visited it 3 years ago, and I just visited about 2 months ago. And in the factory, when I first went there, first of all, they've gone to almost complete automation. They can run this factory with maybe 5 people. And it's 2 or 3 football fields, soccer football fields, or American football fields, either one, just to be politically correct. But it has very few people, and it's all done by automation and robots, and they've just thought about the process. When I went there 2 months ago and had a tour of it, so they'd really gotten the process up and running, they were really proud of it, and they said, you know, it's cheaper for us to buy land in Kyushu than anything we could find in China. The people in the area are desperate for work. We've automated things so that women can come and work in our factories. This is no longer you have to have muscle. It's not kitanai, kitsui, and kiken, right? It's not dirty, dangerous, and difficult. Now it's automated, and they can have women in their factories as a legitimate part of the force. And so this is, there's opportunities like that still in Japan that people have overlooked as they look at China.
Ken, Japan. Why should you do it?
Why should we invest in Japan? Because I live here.
Because of your wife.
Well, she lives here as well. but because I think there's opportunity. When you look at Japan on the average, it looks really bad. And if you look at the average performance of the stock price here in Japan over the last 10, 20 years, it looks really horrific, right? But even before Abenomics, let's say, so this was like I think Brian was mentioning 2012, let's say autumn, right? And if you look 10 years prior, so from 2002 to 2012, stock market obviously was really bad. So, but of all the listed companies here in Japan, what's it called, TSE 1, 2, JASDAQ, Mothers, how many percent of the companies' stock prices do you think went up? So from 2002 to 2012, right, 10 years prior to Abenomics, there's like, what, 4,500 listed companies, something like that? 3,500. Of the 3,500 companies, how many percent of the company's stock price was plus? Take a guess. Do you think it was 10%? Who thinks 10%? 10% of the company's stock prices went up. Okay, let's say 30%. 30%. Who would venture to say over 50% of the stock prices went up? These are the smart people. Actually, it was, I think it's like, when I looked at it back then, I think it was like 56% of the companies went up. But these weren't the Keidanren companies, right? And they're the smaller companies, and smaller companies meant growth. And if you have growth, stock prices go up. So it's obvious. So my point here is, if you look at the average here in Japan, if you look at the total package, there's been no growth. But if you look at certain areas, there's been growth. And so my answer to you, Asper, is because there's growth here in Japan.
I mean, it's very, very interesting. In fact, in my day job, when you look at where there has been no growth, it actually is the banks. If you take out the financials, right, and the financials have been terrible performers, right? If you look at the real world, and that's whether it is new IT companies or whether it is manufacturing companies like the one that Brian mentioned, these companies are sweating their assets. They are having sensible global strategies, right? Whether they are back in Japan or whether they are outside. When you talk to engineers, they are on the cutting edge, of engineering. Do you know that if you look at Tokku, right? If you look at not at special economic zones, sorry, and the other Tokku, when you look at patents, right? That Japan is now no longer number one. China is number one. But China is basically one company, right? It's Huhai, right? If you take out Huhai, and if you look at Japan, it's across an incredible breadth of sectors, whether it is biochemical, whether it is simple engineering, the breadth and depth of the innovation that's going on here is absolutely spectacular. Now, Florian, you live in the real world. You look at things from a German perspective, and I'm sure you've got lots of German companies who are also, very focused on innovation, very focused on quality. What do you tell them about why they should be investing in Japan?
Well, actually, it sounds pretty much as what you were saying about the portfolio of enterprises that have been fairly successful during the last couple of years in Germany. It's the so-called Mittelstand. I think you have read about it in Economist. So that's the smaller size companies, around 1,000 up to 1,000 staff, but also many smaller companies. And this has shown to be the particular strength of the German Renaissance during the last couple of years. Pretty much, as Brian was saying, it's the top end, because we are, as Japan, we are not a low-cost country for real estate prices, labor costs, what have you. We cannot compete with Eastern European countries or China. This will not be possible. So from an entrepreneurial standpoint, it is very important to define the area where you can compete and where you actually will be able to withstand a strong competence from low-cost countries. And I just picked up out one Mittelstand company for you to explain, Goldschmidt-Hermit. Probably nobody will know. They are producing railway technology, all kind of products linked to railway. And this story of Goldschmidt-Helmut is particularly interesting because it has been an Eastern German company. So they were really starting from a very bad position in the first time because, as you know, in 1990 when the reunification was, overnight the East German companies were confronted with West German labor prices overnight because our labor unions negotiated that there should be no unequal payment over longer time. So they were completely out of any sort of competitiveness for many years. But somehow they steered around, and how they did it, they were looking at their portfolio and understanding that even within Europe, with a strong French railway industry, they could not compete anymore on producing wagons and locomotives. This was way too capital intensive for them. So they were focusing on small parts, particularly welding and railway setting up. So also very capital intensive production and engineering process. And they have been capable in developing a brand around this core competence located in Eastern Germany and buying all across Eastern Europe remaining railway companies or producers of railway supply from Eastern European countries. And around this core in Germany, they were able to set up production lines that were cost competitive at the same time as high-tech production. And the high-tech, the trick is that the high-tech production, as Brian was saying, stayed in Germany, and the lower skilled, less capital-intensive production was used in Eastern European countries. So this was one concept of how this particularly company was able to survive. It helped a lot, as I told before, that German wages decreased, real wages decreased for almost 10 years, or in 30% in real terms. So there has been a cost also inside of Germany, not only for this company, but all over the German economy. We saw for 10 years no dynamic in wage development. So from the cost base inside the country we were advancing. We did make use of production capacities overseas, which in our case is right next door. That was more or less the concept, how our enterprises stayed aloft. And now the connection to Japan again. Here, my context in Japan, I also know many Japanese Mittelstand companies, smaller companies, and they might have very good products. But their problem is, as I have been told many times, that if they have something real advanced product to offer, they are more or less forced to pass it on in their keiretsu, and they are not able to export it directly. And exporting directly, this is really the strength of German Mittelstand. They are international, they are highly internationalized. Even a small company does sell their machinery all over the world. And that might be a possibility for Japanese companies so as to gain market share and not only being concentrated in delivery subcomponents, and maybe they might be very highly sophisticated technology, but only sell it to the Japanese company that is selling abroad. This is not as profitable as selling directly to others. And that is something I observe here, that many Japanese companies do still need to work on their internationalization, and it starts with good English speakers being able to communicate all over the world, and also somehow breaking with the tradition and only delivering the Hitachis and Fujitsus.
Germans have become good English speakers, which also 20 years ago was a complete misnomer. What is interesting is, on the reforms, and you touched on something that is, really from an analyst perspective, sort of still a big difference between Japan and the rest of the world, which is cross-shareholdings. You've got here an example of a mid-sized, of a small company that actually regains international competitiveness, but it's not encumbered by cross-shareholdings. It is not encumbered by having to sell up at a low margin, because it's a Staoke of one of the leading companies. And, during these Schröder 2020 reforms, or was it 2010? Sorry, in Germany it was 2010, but we only became world champion this year. 2014. Okay, sorry. Soccer. No, but So 4 years late, but it was glorious. Anyway, but no, but the point being, you know, that you've got actually in Germany, you know, during these Schröder reforms, you did actually see a sharp drop in the German cross-shareholding structure, and basically they're not a factor, you know, anymore. So German small and medium-sized companies, where the technology, where the core competence, you know, exists. Here in Japan, cross-shareholdings. Abenomics, you know, a friend of mine from the Ministry of Finance was very nice, you know, at some session, you know, last week, you know, he sort of said, Abe, he's doing everything that's free. So he's doing womenomics, which doesn't cost anything, and he's doing corporate governance, which doesn't cost anything, which is good for the Ministry of Finance. But in all seriousness, corporate governance, stewardship codes, changes, you know, in corporate behavior. Brian, where do we stand on that?
You know, in the last 18 months, actually, there's been, I feel like there's been a big groundswell. Corporate governance has been a word in Japan, just like customer satisfaction was 15, 20 years ago. And it was a slogan. Oh, we'll have a conference on corporate governance, and there was always a consensus in Japan. We don't have outside board members and blah, blah, blah. I think there's been a massive, massive movement within Japan that is going to start impacting further. And there's a couple of things that are driving it. One, I would argue that the JPEX 400, despite what you may think of whether it's a good index or it's not, I believe it's a really, really impactful measurement in Japan. And the reason is that we've already seen some large companies going, wait a minute, why are we not on this list? Well, because your ROE is so terrible. And so the CEO is saying, I need to learn about this ROE thing, figure it out, and let's fix it, right? And that means, back to your cash is dangerous, do something with all the cash we've got, and make a good return on the investments that we make. The stewardship code and the corporate governance code that's coming out, ultimately, whether the actual impact of what they do is huge or not, the impact of the idea of it has penetrated all the boardrooms. So that when we had we had about 20 CEOs up close to Nikko this past week, they're all talking about it. And one of the things that we did at Taiyo is getting an outside board member, for example, on a Japanese company is almost impossible because they say, well, they don't know our business, they don't understand it, they can't come in and do it. And most Japanese boards are also active managers, and so it's a dual role. So we created what we call the Taiyo Executive Club. And we've been investing for 11 years. We've got these company presidents that we trust and we like, and they retire at 63 or 65, and they're still young. And we especially like the ones that have gone through lots of pain, because they're the best ones to be outside board members. And in this CEO roundtable, I say, look around you. This is where you're going to get your other board members. And so last year, we got our first board member placed, a former CEO from Nabtesco. I did the whole, it was like a gokon almost, where I introduced, I had a special dinner meeting and I introduced this guy and just see if they would like to maybe date. And they liked each other, they began talking with each other, and the minute I left the restaurant, I got a phone call on my cell phone. Hey, would this guy be our board member? And so we introduced it and it happened. And I think there's an openness to that. And now at our CEO roundtable, I had that CEO tell everybody else, tell us how it is to have this outside board member. And he said, at first it was a real pain because he would say things, right? Which is really shocking for what a board should do. But he said it's become such a valuable thing because he has an outside perspective that no one in the company does because we don't hire anyone from outside. And he sees things that we don't see, and the whole board has begun to trust, and I think that's gaining a momentum in Japan. I'm optimistic that there'll be more of that. I don't expect it to suddenly be this sea change, but I think there's 1,000% more than it was before.
Brian, what's always cool is, I mean, we are the gaijin, right? We're the black sheep, and we do this stuff, and, you know, so this is good. It's now a little bit hands-on. Can you've got significant holdings in companies. You know, you're engaged with management. What about the Japanese insurance companies, the Japanese pension funds, the Japanese institutional investors? I mean, do they, you know, have an act in it? Do they, you know, act on their fiduciary responsibility?
They haven't, but I think they're going to. We just we got a mandate from GPIF, which means I can't talk about GPIF. But I think that if you look at what happened in the United States, when CalPERS began to realize, hey, we've got all this financial resource, we have a fiduciary responsibility, we're not going to be able to meet that unless we do something and get our returns up. CalPERS began to actively vote its proxy. It began to demand that its managers voted their proxy. And it created this kind of activist fund, which is how we got started, because they wanted to have an impact on Japan as well, that would go out and engage management and try to, and our approach was take good companies and see if we can help them become better. But I think that what you'll see is the Japanese pensions will look at the same thing. We've got this inverted pyramid of demographics. We can't get by on 0.0000001% interest rates. That's not going to give us the returns we need. Even a 2% bond is not going to get us there. We need to have equity. And as that awareness continues to grow, and I think some of the Abe reforms that are directing at this with GPIF, the impact will be broad and wide, because Japan, everyone will look and if GPIF does it, or if PFA does it, then everyone else can do it.
It's very interesting because, sometimes, American investors in particular can be very harsh, and they sort of say, to me, so Kosan, or rather Jesper, what has Abe actually done? And that you can't bullshit. I mean, it's very difficult to bullshit a guy from Texas, right? So I said, okay, Abe has done three things. The first one, he's the first prime minister in one generation. When he goes overseas, he travels with at least 10 business people, and they actually have a plan. When they go to India, when they go to the Middle East, they have a plan, as you know, they want to sell 30 trillion yen of social infrastructure projects, desalination factories, port facilities, etc. They have a plan, they're selling this. This is Kokka Senryak. And I don't know whether you know, in the first year and a half, they've actually sold almost 20 trillion worth of these exports. So that's actually very concrete, okay? A guy in Texas can say, all right, this is not bullshit economics, this is real, I can see this stuff coming through, right? The second thing, that they've done is they've started a shaming campaign. And that's exactly where this ROE, corporate governance code, where that actually starts to come into place. That you're not a member of the JPX 400, you got to be careful. Pretty soon you won't be admitted in the clubs in the Ginza anymore, right? ROE, capital efficiency. I was joking with my analyst team after the recent results season that even, some of the Japanese large banks, now on page 2 of their handout, they have an ROE target. Trust me, 2 years ago they didn't know what ROE was, right? So, the funiki has changed, as Hori-san always wants to do. Let's change, the scenery. Let's change the atmosphere. And, this, has actually, happened in Japan with the JPX 400, with the Stewardship Code, and I very much hope that Shiozaki-san, is going to drive this further, right, now that he's actually the minister of the Koseisho. And then finally, I think very concrete is the whole womenomics thing. 2 years ago, you couldn't really talk about women on the board. You couldn't really talk about empowering women, into executive positions. Only my wife, was brave enough to actually do so. Sorry, my wife is Kasi Matsui. So now, however, you can talk about it. It is part of the agenda. And this women's summit that they just did on Friday and Saturday, Abe was spectacular. He actually showed up in the workshops, he spoke and contributed to the discussion, and the result is going to be presented when he makes his speech at the UN General Assembly in 2 weeks' time. So again, the huniki, the entire keshiki, the entire scenery here in Japan, from that perspective has changed. So that's good. The animal spirit has changed. Now, I want to open it and phase it into the discussion because I want to hear from you. But I want you to answer and think about a similar sort of question to what I'm going to ask each of the 3 panelists. If you had 2 minutes with the Prime Minister, just 2 minutes, you've got to be precise, what is the 1 or 2 things that you would like to see enacted? What are the 1 or 2 concrete policy measures that you would like to see coming forth? I'm going to start with Ken.
I thought this was going to be the last question. That's the last question. Okay. 2 minutes. I would say consistency in the tax policy, because the problem in Japan is not just that it's high or low or whatever, but the tax policy is not consistent, and I think that's one important. And in that respect, I think the NISA, which is the individual savings account that took after the UK NISA, now they're talking about junior NISA, and this is going to be very important, I think, going forward, because for the future generation. But it's inconsistent in the sense that because it's supposed to be a long term for your children, but it's currently capped at 10 years, like the NISA here, and so it's a battle between the people that want to do it and with the tax authorities, and so and this is where the Prime Minister comes say, this is a long term commitment. We're going to put this junior NISA in place so that when all our children, when they grow up to be adults, they're going to have some assets, financial assets, which is very important.
Okay, consistency of the tax system. One wise man just gave me once, 20 years, gave me some advice on Japan. And he said, you've got to be careful with the Japanese because their favorite strategy is toriaizu. Let's just do and then we see, we can revisit, But okay, consistency on tax policy in particular, so that you can have long-term generational planning. Yeah, right, consistency and commitment. Yeah, Florian.
Although it might seem as a German focus point, and our representatives do say it everywhere all over the world, I would argue for a situation of fiscal stability and fiscal accountability for the public side, which is from my point of view also fitting fairly well with what Brian just said. If you want to channel the enormous wealth Japan has into the right and productive areas, you have to create a background that this kind of movement of capital is not endangered by unsustainable public finances. And this is really a focus point that is really worth considering. If it would be so easy to let all the JGBs buy by Bank of Japan, by your central bank, I'm sure somebody would have discovered this before. So be responsible on the public financial side, because otherwise you might overnight become in a very dangerous situation. And coming from Europe, we have seen it. Of course, Greece and Spain are not Japan for many, many good reasons, but investors' confidence can change quickly and also exaggerate certain positions. So this would be my advice.
This is actually very interesting, and I'm not going to come to his support just because I'm German, right? But in my discussions with, global investors, right, who are really thinking for the long term, right? I mean, this is not about trading for a particular quarter, This is in the long term, you've got an issue, right? Debt to GDP, debt to income is at 2.4 times. Japan has very adverse demographics, and now the problem is that Kuroda JGB or Kuroshita. The fact that Kuroda the Bank of Japan has killed the JGB market. I mean, there are now 10-day periods when the benchmark bond in the second largest bond market in the world, the government bond market, does not trade, which means there is no price-finding mechanism, right, that actually is going on. And that, as Ken alluded earlier, is from a financial analysis perspective very, very dangerous, because you do need to know what is the risk-free rate, because it's against the risk-free rate, against the government bond yield, that you benchmark your return in risk assets, whether they are stocks or whether it is real estate. Everybody agrees that 0.5% is not the right rate. But is it 1.5% or is it 4%? The market is not allowed to function, and as a result of that, the sensible pushback against Japan is that, wow, if I don't know what the risk-free rate is, how can I know what the correct earnings yield, what the correct risk premia in the real estate market, in the equity market should be? So from that perspective, getting fiscal sustainability on track in a credible fashion so that the private capital, the private market can find the risk-free rate is actually, a very, very important issue. Brian, you got 3 minutes with the Prime Minister.
Good, because I'm going to need all three. No, I'm an unrepentant capitalist. And as I listened to the earlier session, I realized some of my comments probably people aren't going to agree with. But I think that it's unleash the free market. And the first thing I would do if I had a magic wand is I would cut the corporate tax rate to 20%. I would cut the income tax rate to 20%. I really am opposed to increasing the consumption tax again. I think it's not just a stupid idea. I'm not imputing anybody that thinks differently. I personally think it's not just a stupid idea, it's a stupid idea. Not that I have an opinion about it or would say that, but I think if you did that, you would see in Japan had, until recently, it had the highest corporate tax rates. I agree with your stability comment, but it is about how high it was. Japan had the highest corporate tax rates. And so people were focusing on how do I minimize my tax instead of how do I maximize my company. Get that out of the equation. Make Japan the place that every Asian company wants to put its headquarters. Right now, I guarantee you it's not. It's Singapore or Hong Kong. Nobody wants to come to Japan and set up a headquarters. You come here because the market's big and you kind of have to be here, but you're trying to figure out some way that you're not going to get whacked by the corporate tax rate. Japanese companies are uncompetitive with their foreign. Germany is a low tax state compared to Japan. When did that happen? Thank you, Germany, for doing that, because I hope it'll push Japan to be that way. America now, home of the free and the land of the brave, and the highest corporate tax rate in America. Japan should take advantage of that. Make America look really stupid with the lowest tax rate. Make it the most attractive place to put capital. Not that I have an opinion, but.
This is why we like America. I mean, he wasn't giving advice; he was taking over, which is fantastic. Which is exactly why we love Americans. Again, I mean, the key issue, at the end of the day, the key issue is how do I get risk money, risk capital committed to Japan? And again, the pushback I get in the real world when I'm bullish Japan is, this erudite argument about the risk-free rate, which I mentioned earlier. The other argument is, look, I'm just a street-smart investor. I do not invest where the locals do not invest. And it remains a reality that we've had a year and a half of Abenomics, right? You can still count on not even one hand the number of large corporations who are prepared to commit risk capital here in Japan. They are buying companies overseas, they are building factories in Mexico. I'm not saying these are bad strategies, but look, if I'm just a street smart guy that I don't understand things, I'm just very simple, are the locals investing in Japan? Now, you know what my counter argument is? My counter argument is that actually there is one risk market where things have changed. Real estate. When you look at Japanese insurance companies, when you look at Japanese pension money, they are actually beginning to invest in domestic real estate. So Fudosan, you are starting to see a flow. The second area, you do start to see an increase in venture capital here in Japan, in private equity money. That is starting to flow through as well. So it's not in the standard areas, right? But in the interesting areas of future entrepreneurship, as well as of real estate, you do actually start to see domestic savings beginning to come through. Now, I've spoken too much. We want to hear from you. So you've got 2 minutes with the Prime Minister. What would you say? Or any other comment that you would like to make? Please. And you have to, Greg, you're going to have to tell who you are.
Thank you, Jasper. Greg Story from Dale Carnegie Training. One of the real fears I have for Japan is the concentration of everything in Tokyo. I lived in Japan as a student in the 80s, 70s and 80s, so I thought at that time that Tokyo equaled Japan. When I came back in 92, I worked in Nagoya, I opened an operation in Nagoya, then I lived in Kobe and worked in Osaka, and you discover very quickly that Japan does not equal Tokyo. But what we're seeing now is probably the greatest concentration in a long time of wealth and power and decision-making in Tokyo. And the rest of the country is going to hell, basically, in a basket. So I think for the long-term growth of Japan, there's got to be something done around that. Now, putting Ishiba out to pasture as being in charge of this sort of agricultural revolution in the provinces may make sense politically, but I think we need something much more thorough to balance out the growth of the country around the whole country, rather than just having too many eggs in this one basket. Because if we have a disaster here, we're in serious, serious trouble.
Yeah, I think If I may reply to your comment, equalizing growth all over the country is very costly, and I think Germany is really on the forefront that we have experienced this. After reunification, what we saw in Eastern Germany, that was a very low productivity landscape, and also qualifications didn't quite meet Western standards, or at least formation was done in a different way. So we saw immediately after reunification, we saw a massive flight of people going to southern Germany and working in the factories, well-paying high-tech jobs. And now, if the political or the policy reply was, of course, to set up structures in Eastern Germany as well. Costs a lot of money, and it takes very long time. Now, 20 years later, we start to see re-emerging productive areas in Eastern Germany. So, yes, Japan is certainly not Tokyo, and it's somehow there must be some kind of process to equalize chances for people to stay in their communities. But don't expect an overnight change, or don't put too high a burden on policy implementation on the ground in expecting that chances do pop up immediately, or even if in 2 years or 3 years' time. When we started our reform process, and coming back from the Eastern German story, our focus was the reforms done in UK in the 1980s, and it takes 15 years until it becomes effective, actually, and particularly in regions that are somehow remote and far off from any kind of
Tokyo is very important. The GDP of Tokyo is apparently the same as Korea or Mexico, so it's a very big, portion of the GDP here. But if you look at just Tokyo, I think you missed the picture. Fukuoka, if you go there, it's booming. Nagoya, I think it looks very good. I'm going to Sapporo next week, and I was told by a friend, I usually stay at this hotel called Daiwa Roynet Hotel, which if you invest through the internet, 1 month prior it's like 6,000 yen, 8,000 yen. It never goes over, 10,000 yen. My friend was saying for some reason the same hotel was 3,500 yen, or 35, someone was saying 35,000 yen, yeah? And so I thought, oh, that must be some quirk. I tried to reserve it, it was the same price. So there's something going on in Sapporo, that's, so maybe shortage of hotels, but I think the point is that there are pockets of Toshi cities in the regional areas that are doing actually pretty good business, I think. And so if you just look at Tokyo, my point is I think you kind of missed the picture.
Okay, we have one member of the G7, of the G1, sorry, the G1 board, Mr. Hoshino. He's got actually a very concrete, policy proposal, which is that if you want to revitalize the regions, you should change the holiday schedules in Japan. And as you know, there are uniform holiday schedules right now, so everybody gets stuck on the shuto. So, Germany, for example, has deregulated holiday schedules where different provinces have holidays at different times, and as a result of that, you actually ease up domestic tourism in a very, very concrete fashion. Any additional questions, comments that you have? Richard, you look puzzled. What would you tell the Prime Minister?
Richard Folsom, Advantage Partners. When I get asked this question, I invariably end up with the same answer that several talked about: tax. And it does seem that the Ministry of Finance has a stranglehold on this economy that even the Prime Minister in a strong leadership scenario like we have now, for some reason does not have the power to break. How do we break that? Because I do agree, lower taxes, more consistent visibility into what taxes will be are the things that come first out the lips of international investors when they're talking about coming into Japan. And I don't know, I don't have the answer. How do you break that stranglehold?
And how do we break the Zaimusho power?
I think it's a Zaimsho power, but it's a Shuzeikyoku, it's a tax bureau power, I think. And because I think they're I don't know if this, because they have the authority to come check on your taxes. if you're a politician, you might not want to have that done.
I think this is where we need to recruit Kathy to go out and find the Japanese Maggie Thatcher. We bring Maggie Thatcher into the Japanese government. She kicks all the men firmly in the pants on tax policy and makes the change.
You know, it's actually very interesting. I mean, taxes. Please, you go ahead.
All right, hi. It's a fascinating discussion. I'm Bob Eberhardt. I'm a professor of entrepreneurship at Stanford and Santa Clara University. It's an interesting discussion. By the way, I was a venture capitalist and entrepreneur before, so I know this too. But I'd like to hear what the lower taxes are going to do exactly to help everybody. I know it's going to do for your pocket, I really do. And I know it'll help you. But I know it'll help you. But what we'll do for everyone, there's things to think about. Number one, businesses, found companies seems to be a relevant tax policy. Look at the money going into China and the effective tax rate in China. Look around the world, it tends to be irrelevant. In addition, in the United States, where entrepreneurship and growth is highest, is in the highest tax areas with the most regulation. I'm not saying that high tax and regulation causes that, but San Francisco and San Jose are highly taxed, very entrepreneurial, and highly regulated. So the question very specifically is, don't defend what it's going to do for you. What's it going to do for us? What's it going to do for growth? And how do you reconcile it with the fact that it doesn't seem to change behavior until it gets very high?
So I was located in Monterey. I'm now located in Seattle.
I know I could speak to one of your sessions.
I moved my whole office. We had 40 people in our office. I moved all of them from the Monterey area, where we had a 13% state income tax, to Washington State, which had a 0. And perhaps I'm an anomaly, but I don't think so. There's a whole bunch of companies that are moving out of California. How does it help? If you look at, and if you do a valuation on any company and you look at how they use their money, 40%, they're paying a 40% tax rate. And Japanese companies have become, they've become so used to it. Well, and first of all, I would like them to have CFOs instead of super KD buchos, right? Because what happens is they look at it and they go, oh, shogunai, tax is shogunai. And I think to a certain extent you're right, they don't do anything about it. But if they did, you can simulate this out, you can model it for them and say, not anything illegal, do legal things to lower your tax rate. This is what happens. This is the money that you, instead of giving the government 40%, if you're able to lower your effective rate down to 20%, and you can take that extra 20%, suddenly you've got cash that you can either pay to bonuses, which you haven't paid in 5 years, or you can invest it in R&D, or you can use it to go buy companies, Silicon Valley companies that are overtaxed. There's opportunities to use that cash. They're immediate. They are. Have you ever driven down and seen all the potholes in the roads?
But maybe they don't have the money to fix the potholes. Maybe they don't have the money to build the schools and the colleges. Maybe they don't have the money to give raises to professors. Maybe they don't have the money to engage in research and development. We don't have NASA. We don't have the national funding is going down. So the point is, you're right. 40% is going off.
Please speak into the
mic. I'm
mic.
not completely against you. I just need you.
It's going to the 10 guys that are standing around the pothole watching the one guy down in the hole dig it, right?
Maybe you want to keep it good to the 10 guys.
See, this is why fiscal policy and tax policy, in particular, in German we say it's like making sausages. It's a bloody, and mysterious business, right? But hopefully, it's like sushi. The outcome is good. But the debate, what stimulates economic growth? Now, it's very interesting. Just to report back from this women's summit, they were asked to come up with concrete proposals, and this was all women, who came up with this. And the most important, the top priority proposal, again, involves taxes. As you know, if you're the second income earner and you earn more than 1.3 million yen, right, it basically becomes tax inadvantageous for you to actually get a full-time job because your after-tax earning goes up. To actually have fully equal treatment of taxes, right? That's sort of the top end of the agenda. So taxes, whether it's corporate taxation to stimulate economic growth, does it not, or whether it is specific issues, right? Hopefully it's going to be very much on the agenda. Please, and who are you?
My name is Aruna Basnak. I'm a partner at Sunbridge Venture Capital Fund. there's a lot of talk about tax and other reform, but nothing about immigration today. And my wife, who happens to work, is enabled by the fact that we have domestic help. And I think, why is immigration not discussed at all today? Oh, I open the Pandora's box here.
Immigration. Relative to other countries, yes, Japan has low immigration. But if you think about it, if you look at snapshots of 10, 20 years, 20 years ago, if you walk into a 7-Eleven, Mr. Yamada, Miss Suzuki, I mean, look at the nameplates of people working at 7-Eleven these days. So those are the low-paying jobs, right? And the point, I think, the low-paying jobs, I think the quote immigration, they call it training, but they come in. Yeah. The point is, I think, the higher professional jobs. And that I think there's a mental block still. But like I said, some of the corporate board members, was it Lady Judge? She's a good case. But if you think about it, 10 years ago, that wouldn't have happened, and no politician would have brought out the topic of immigration in public. But if you think about it, it's happening. So if you think it in that perspective, yeah, I mean, it may be too slow. It's slow, but at least it's going that way, not the other way.
And I've lived here for 13 years, and so I've been, I guess, a sort of an immigrant. But it's one of those things. I believe it is changing. I mean, like you said, I see things happening. Japan's had its bouts of, okay, we're going to bring in Brazilian Japanese because they're not as different, and then we bring in a bunch of Iranians, and they all stay in Ueno Park and cause problems. Let's get rid of them. And Africans, so Japan's gone through its waves of immigrants, mostly for the worker thing. I think it's a hard rock to push up the hill, but I think it's happening. And I think for the reason that you said, domestic help will be a place where it's an easy. If you identify these places where it makes sense and makes Japanese lives better, as opposed to taking away a job or causing unharmony, there's opportunities for it. And I think the other thing that you either got to immigrate people in or you've got to have more babies, right? And so Japan's got to face that decision. Are we going to continue to have one baby per couple, or maybe they should encourage 3, right? And some of that goes into reforms.
I'm going to make an aggressive point on this because I'm part of some of these government panels, and I'm obviously it's Robbie Feldman and myself, we're sort of the 2 white guys left, for these panels, so immigration, the issue always comes up, right? Japan is actually very, very pragmatic about this, right? If you actually look at the laws, it now takes you 5 years, right, to get Eijuken, right, which is the equivalent of green card, which is permanent residency. They're going to shorten that to 3 years, right? In America, it now takes you at least 12 years plus $50,000 in legal fees, right?
Not if you come in from Mexico.
Okay. Well, there's plenty of illegal immigration. But the point I want to make is one that it's, rules and regulatory issues, right? Our job in the private sector is always to push for more deregulation. That's fine. But it's not the rules and regulatory issues so much. It's the attitudes within companies, right? In the sense of that, Ninami-san, when he was the CEO of Lawson, right, he instructed his HR department, every 3rd person they hire here in Japan is a non-Japanese. And the HR department initially said, oh, it can't be done, yada-da-da-da. He got it done, right? The Japanese are very pragmatic. When I came as a student on a student visa in 1985, you were allowed to work for 12 hours a week. Today, if you come on a student visa, you're allowed to work for 35 hours a week, right? Now, by the way, the Japanese are very Japanese in the sense of that, I mentioned Eijuken, right? You can get after 5 years, soon to be after 3 years. But they're still Japanese. If you had one parking ticket during those 3 years, you have to go back in the queue. So they are very pedantic, right, about these things. But again, on a serious note, this is an issue just like attitudes to women in top-performing jobs. This has much more to do with the Shanai Bunka rather than with rules and regulation. It can be done, and some companies are doing it very, very successfully. So from that perspective, I think I come back to this point about what are the strongest things that have happened, right? The fact that Abe has put, all issues on the agenda, whether it is monetary policy, whether it is agricultural policy, whether it is defense policy. Remember, 2 years ago, you couldn't talk about defense policy. Now you can. It's an emotional issue, right? Energy policy is also very much on the agenda. So all things are out on the table. It doesn't mean that they're going to do things very fast, very swiftly, right? But the good news about Mr. Abe and his team is that nothing is being left untouched. The second thing, in terms of having changed the landscape, right? Having set example with these 5 women in the cabinet, right? It was wonderful to watch, Hayashi-san this morning, right? You're setting this example. Yes, you're passing over seniority and rank within the LDP, but you've got to start somewhere. And the start has actually happened here, and that's what makes me very, very optimistic and bullish on Japan. And yes, I do hope that they do cut taxes, because we all pay way too much. You have no idea. That's okay.
No idea, just that it's true that the taxes don't seem to change behavior.
Right.
So,
Taxes, I think there's plenty of studies, tax code changes, like in Germany. If you just cut the corporate tax, very little is going to happen. But if you do a set of policy, and as I come back to this point that I tried to make earlier in the session, policy coordination is absolute key, because there is no one magic bullet. There's a lot of things that need to happen, but you need to have the consistency, you need to have the credibility, right, for this to actually come through. Now, I want to thank you. You've been a wonderful audience. I want to thank the panel. I hope that you found it enjoyable. Please do network a little bit, and thank you very much.